Vegas right now, man. About to go live here in a second. Um, Invest Fest 1 month away, bro.
Shit finna be crazy.
Coming
You
up
I was
ready?
about,
fast.
yeah, that shit finna be crazy.
You ready, Tevin? It's your first one.
Yeah, it's my first one, bro. Shit, I'm just excited. You feel
What you
me?
looking
Black
what you
truck
looking forward
energy.
to the most?
Honestly, connecting with y'all. Getting to know y'all face to face. That's first and foremost before even meeting other people. So and it's gonna be my first time going to Georgia too, so I'm excited for that. And I'm just ready, man.
Oh, you never been to
Excited.
Georgia before?
I never been to Georgia, bro.
Jeez. Nah, you gonna have a good time, bro. Telling you, man.
My
Alonzo
man,
went
two
for
of
the
my
first
man's
time
out there.
last year. Him and KB. Y'all wanna talk about your experience at Invest Fest? Can they hear me? Alante?
I was gonna say, y'all know,
What you say?
Caleb Silver, y'all gonna be looking for y'all after last year.
They gonna be
I'm
looking. They gonna be
I'm
looking for all of us,
pissed,
huh?
man. I'm pissed. I ain't gonna be going this year. Nah,
Are you not
it's gonna
going,
be a good time.
Oz?
Nah, not with the baby. Not with the baby.
Oh
I
yeah,
gotta, I
yeah.
gotta, I gotta take care of the home front this year. Next year, definitely gonna try to be back. But nah, unfortunately, not this year.
Hey, we cooking up something though in Dallas though, in November. We
November.
cooking up something, yep, in November.
Okay, okay.
And you think that's still too early?
Nah, I think that's probably right on that borderline. So we can talk about it, but just send me the details and definitely let me know. I'm gonna see if I can make that shake.
Definitely. We're gonna have an ecosystem gathering out there, man. I think it's gonna be well needed, man. I think it's gonna be great, bro.
When
Hmm.
are you coming out to New York?
For me,
Yeah.
um I was supposed to come out there the third week of July, but next weekend it's a lot going on in Indianapolis next weekend. So I actually might be going back to Indy. Couple birthdays.
Oh, dang, you left. I was trying to go to Shadow Lounge. Dang, thought you was
Keys
still
Keys
here.
Keys must have missed the live from Vegas. He must have missed that all
I
week.
was asking. I was asking where was the live. I asked. I said, "We not going live." I put that in the chat. I guess I did.
Yeah, we out here. We out here in Vegas right now, bro. We,
Oh shoot!
yeah,
Enjoy yourself.
we about to have a good one though, man. So I don't want to take up too much time. Let's get going. I know as everybody just pile in, they just gonna be to see everything that we talking about. But first up, how we feeling though? How the market? What's our sentiment right now? How everybody feeling?
Feeling good as far as trading wise, man. I'm being smarter with the trades and really just letting the market do what it do. I can't control the market. That's how I feel now. Like I feel like I'm better at trading, just letting the market do what it do, buying time and getting in at good prices.
Got you.
Don't stress it.
How everybody else feeling?
I think
Good, man.
good.
Oh
Good.
yeah, yeah. What you say, Keith?
No, I was saying good, man. Definitely learning how to be patient and let the market do what it do. Because it
Hmm.
dropped, below the point that we had got in and we didn't shake, we didn't fold because we seen it up, 5 grand. So it's like, what almost you just got to be patient and let the play go all the way out.
Yeah,
Bro.
Yeah,
Bro.
yeah. I try to buy time on plays, but my thing is being patient. That's the hardest thing to kind of get on top of, just because it's just hard to. You see a play go up, you're like, no, it's going to come down, it's going to come down, but it just doesn't look like it at that time. But I think patience is probably that hardest thing to master, and I think being in this group is definitely a testament to that, and it gives you confidence to be patient, just because you got people on the same page as you. But yeah, no, definitely waiting, but buying time has definitely helped in that aspect though, just because it's like it gives you time for your plays to come back. It's like even if it comes down, goes against you, it you have that that it's going to come back, or it has the time to at least come back before you got to cut it.
Can I provide some insight into the patient side of things?
hey man, but
Please,
hold on,
please.
Joseph. Hey man,
Greetings.
welcome back,
How are you? How are you? How are you? Face
man.
cam completely on today, but
Come on, man. Hey man, we had a special guest come back on, man. He's been cooking up something, man. Y'all know who he is, Joseph Jenkins, man. He wanted to come
Good
on
to
and
see you, brother.
man.
nice to see you guys again too.
He see we've been growing, we've been climbing. I know everybody's probably a little busy. They still coming in. Yeah, I'm getting text right now. We'll be on in 10 minutes. Yeah, we climbing. But it's good to see Joseph still doing his thing, and he coming to share some insight tonight. So, what you got to say, Joseph?
The lesson that we're gonna learn today actually solves all of your problems at once, to be honest. I think you guys all have the same problems, and it's for me, when I first started trading, I wanted the highest upside imaginable. I wanted to get rich like just ASAP. And I think a lot of people, whether you like it or not, you kind of still have that same mindset. Risk management is very hard when you're not making a bag outside of trading. Trading can be like the one vessel for you to make it in trading. So definitely, fuck, man, my ego was at its highest when I was making 100 grand in a year and then losing half of it to trading. Have to go back to work a fucking 9 to 5 job. It pissed me off, right? It crushes your ego. So I think like for me, kind of how I got past that is kind of building my bag first, building different revenue streams, having income coming in, and then letting trading be the byproduct of all of that. Trading is just a multiplier. But your risk management will come when you set high standards. That's really all trading is. It's setting high standards and knowing when to leave the market alone. Like I feel like everybody kind of has a problem with that. When do I leave the market alone? How do I keep my wins? I can guarantee you, all of you, every single one of you, you've seen a trade go green. If you cannot keep a green trade, it's probably because you wanted more out of it than the market was ready to give you. So like every single thing goes back to the same core. Who are you outside of this realm? And that's what I'm kind of going to show you guys today.
Amazing, amazing. Before we get into that, Joseph, I want to go over a couple housekeeping things just with the guys. Before we let you take the show away. Um, Earning season is next week. I think we got I think it was ASML. Actually, let me share my screen early today. Scanning my screen, and I also want y'all to go. I want y'all to start going to these websites as well that I go to every single week. Earningswhispers.com. Y'all can always go look at that. You can go to the calendar. And then you can click on any day of the month or the year to see what earnings is coming out, right? And you can go to Twitter, you can go to X. There's so many different sources. This is what I like to go through. If you want to see them weekly or monthly and have the notifications hit your phone, it costs a little bit. I mean, but I don't think it's too expensive. But for me personally, let's see. Let's go to Monday on the 13th. It looks like we have. What was this? Look what got an ad right there. Arrow and FBK reporting. Arrow and FBK. Let me see who else. Yeah, I see why they got the ads busting so they can have you pay for something. Tuesday. AEHR, EQBK, PXED, KMTS. Who else? And then I think Wednesday is when we have some of the bigger dogs. United Airlines. Let me see. Thought it would have been Wednesday. Let me check. Thursday. Yep. So Thursday, look at this. Look who reports on Thursday. Netflix. Netflix. So that's one that we definitely need to watch, right? Who else? ISRG. I remember KB talked about them a while ago. CNS. We talked about them before. INDB. Who else? And then on Friday we have nobody on Friday. And then I want to see the week after because I thought they said it was next week, 21st. ALK. Nothing crazy. Let me see, the 22nd Wednesday. Okay, so next Wednesday, so not this coming Wednesday, but the week after. Then we got Tesla, ServiceNow, IBM, Texas Instruments. It looked like the week after is when the big dogs start coming in and starting to report. So definitely use Earnings Whisper. You can also use what is it? Earnings. I forgot what was it called? Earnings. Jeez, what was it called? Reports. It's another fun one that I love to go to. Let me see. Maybe it's NASDAQ.
You ever use stock twits?
Nah, I never have, bro.
It's like a same thing, but there's like a online forum there. People break down
Okay.
like stocks and stuff all the time.
Okay, good. So, all right, got you. I'm gonna definitely look into that, Joseph. Tuesday, yep. So, okay, yeah, I don't know how that site just missed that. This is why it's always important to go to several references when you're looking up stuff. So, next Tuesday on the 14th, JP Morgan, Bank of America, Goldman Sachs, Wells Fargo, all the banks report on Tuesday. Wednesday, there we go. I knew it was ASML. I seen it earlier. ASML on Wednesday. Johnson and Johnson, Morgan Stanley, BlackRock, right? The Bank of New York, right? Thursday, TSM, Netflix, like we seen that earlier. United Healthcare. I remember Tev been talking about United Healthcare. They report earnings, so these are good ways to gauge the sentiment of the market, and the sentiment of where these companies are really at fundamentally. I know everything it gets kind of blown away um with technical and with trading, but always stick to the fundamentals. You can always see truly how a company's doing when you look at their balance sheet. So, and then the week after, like I said, we got Google, Tesla, GEV, Texas Instruments. Man, we're gonna be finishing off July. Whew, with a lot just to finish off July. Thursday, Intel. Everybody been talking about Intel the following week on Thursday. And then Friday, American Express, Verizon. Definitely look into those. So definitely look into these um earnings reports. This is where y'all can see that at. And then the last thing I want to show before I let Joseph take the screen away. I really want to dial in on this DRAM ETF, right? And I want us to really see what's inside of this ETF, right? Because we all know ETF stands for Exchange Traded Fund. It's like instead of buying one stock, you're actually buying multiple stocks, all in one index, right? So instead of having too much risk in one stock, you actually got your money spread out over a couple companies, all with one purchase of one asset, right? So when we look at the DRAM ETF, DRAM, right? The largest holding, 25%, Micron. Second is Samsung. Third is SK Hynix, which actually IPOs tomorrow, right? That actually IPOs tomorrow. Why is this important? The reason why you want to really get good at really finding the good ETFs and the ones that are running is because you can see inside of the ETF of the sector of who's up next for a big run potentially, or how heavyweighted are the companies in the index right now, right? So when you look at the top four, top five, you see Micron, Samsung is not tradable yet. SK Hynix has not been tradable yet, but tomorrow they IPO on the American market. And then I think I seen something that next week you'll be able to actually trade it. The options should be available next week. That's really quickly. Then in fourth place, we see the big dog always running, but Sandisk, when it comes to heavily weighted in the DRAM ETF, they're only about 4% compared to Micron, which is about 25%. Okay, and then under that, then you got Western Digital. That's about 4% as well. Then you got Seagate Technology Holding, STX 4%. Then this is another one that I've been looking at. I've been eyeing Kioxia Holdings. I'm like Kioxia Holdings. Why am I looking at them? The reason I'm looking at these companies is because when you're in a sector like DRAM, when you're in a memory sector, when you're in a bottleneck sector, companies will start growing by default of the entire sector growing, right? So if people are piling money into DRAM ETF, it's not just Micron that's just going to be going up. The companies inside of the ETF are going to be going up, but this is where you see how heavily weighted they are to see how much love they get. Is how I put it. So, and then you got Giga Device, Semiconductor, Nanya Technology, Japanese. I want y'all to see that, and then I want y'all to see also Disk, another memory ETF, DISK. I sent this in the chat about a week and a half ago, and look what's in their holdings as well. But look at their top 10 holdings. They got SanDisk at 17%. Kioxia, that name I just said, at 16%. I keep seeing this name Kioxia in the memory sector that we need to pay attention to. Samsung third place, SK Hynix fourth place, Western Digital fifth place, Seagate sixth place. Micron's all the way down to 4% in seventh place. Hmm. NODIS, SK Square, Nanya Technology. Always look at these ETFs so you can get a good gauge of how these companies are heavily weighted inside those ETFs.
Hey
And then
Nate,
what's up,
real
brother?
quick.
What's up?
Which ETF is this one again?
This is DISK.
Okay,
DISK.
all right, bet.
And they're about, let me see, I'm gonna show you stock price. They just IPO'd or not IPO'd, they just became tradable last week. And look at what they're worth. $43 a share. Okay. And then we looked at Tram. I think they crossed back over um yep, 60 today. So 64. And then the last one I always want us to look at SMH top holdings. And I'm pretty sure y'all aware of this, but if you're not, I want to educate you on something. SMH stands for the Semiconductor ETF, right? Semiconductor ETF 593. I think a couple weeks ago, someone had said, "Yo, why is SMH trading like a regular stock when it's got all these companies inside of it?" Because the chips, the chips that were inside of SMH in the semiconductor space, they were doing really well until they added a specific company inside of it. And I want y'all to see what company they added inside of semiconductors. So we know Nvidia is the heaviest weighted, right? We know TSM is in there. We know AVGO is in there. We know AMD is in there. Look who also is in there now. Micron. Wait, why is a memory stock inside of SMH now? ASML, TXN, KLAC, LRCX. Khalil been talking about that for a minute now. Intel, Analog, Qualcomm, Marvell, hmm, Cadence, Synopsys, MPWR, NXPI, TER. Why is this important? I just told you. When you can find the indexes that are or the ETFs that are leading, right, in these sectors, you can go inside of them, do a little bit more research, and get to see who's getting a lot of love in the market. Right? So if SMH is going crazy, I can bet that Intel, Marvell, Micron, Nvidia, TSM, AVGO are probably going crazy as well. But if SMH is falling apart, we can probably gauge that these semiconductors and these memory stocks are probably falling too. Okay, not all the time, but this just gives you a good gauge. It kind of gives you good direction on what's really going on behind the scene. It's like having a car that's driving good, and on the outside it look good, but you actually get to lift that hood up to see what's really going on the inside. And so inside of these ETFs, you get to see what companies are being rotated in and out, and you get to see how much love Wall Street or these companies are really getting, right? Obviously, we see Nvidia at the top with that, TSM, AVGO. We see Micron in there now, right? We see Intel in there, Cadence, Marvell, Synopsys. Hmm. So if I feel like these are going to be the leaders of the future, it wouldn't be bad if you don't know which one to pick, it wouldn't be wrong to pick the whole ETF. So I definitely want y'all to see that. And then from there, I'm gonna send y'all some more ETFs that I'm looking at. SOXL, I think it was XLK, the pharmaceutical ETF. I want us to look at all those. Okay, we good?
Can we look at EUV real quick?
This is the last one that I'm gonna let my brother Joseph Jenkins come on, brother.
Got you.
EUV. Let me see what's in there, brother. We doing this live right now. I haven't looked them up before. EUV stock. Let's see EUV stock. Let's see what's
This
in
the
the.
energy, ain't it?
Nah, this is part of the
Nah,
memory.
Yeah, it says
yeah,
it
it's the
looks like
optics, photonics. Yep,
Optics.
photonics. Mm.
that's the
I
one I put
remember. I
in there a
thought.
while ago. That's the one I put in there a while ago.
Yeah, that's what I was about to say. I thought somebody put it in the ecosystem a while ago.
Yep,
So it looks like TSM is their top holding 10%, ASML 9%, AMAT, LRCX, KLAC, GLW, LITE, CN, COHR, Credo.
I think it's at like $28. 20. It's in the 20 to 30 range. Yeah, 26. Yep.
$26 a share. Hmm. I like it. I like it. So yeah, good call out, Tev. We definitely gonna look into that a little bit more. I definitely want to see that a little bit. All right. But from there, my brother Joseph Jenkins, definitely want to let you come on, brother, and share the magic and share the wisdom of what you've been learning, man.
All right. So, just show of hands, quick question to all of you guys. How many of you have placed your first trade? You guys have seen what it's like, the reality of being inside the market. Just drop like a little one in the chat.
Yes, sir.
Er,
So that every single person that has dropped a one in the chat, you guys have already agreed before any trade you've ever placed, there's going to be risk. You're either going to win or you're either going to lose. How many of you guys struggle with risk management? I know when I first started, risk management was almost impossible. I really didn't know how much to risk. I didn't know what trades to get in that weren't risky. But I'm out of curiosity, how many of you guys struggle with risk management or sort of being able to take a loss to the chin? Drop a, I guess, a note, another one in the chat. There is no way only one of you guys struggles with risk management. No way. There you go. Okay. I feel like risk management is, yeah, I'm telling you, trading is the easiest part is like finding trades. The hardest part is knowing how much to risk. So you kind of don't get burned when you're in that trade. Like before I actually learned how to win, there's a huge difference in learning how to trade and learning how to win. Learning how to win is like a self-taught journey. Somebody can teach you all of the setups in the world. They can give you all the signals. But I think learning how to win is like an internal thing that everybody kind of goes through their own journey with. Nate could give you the best call outs in the world, but if you sell too early, if you kind of position yourself poorly, you're still going to lose. So, what I want to do is I want to show you guys just a much better, cleaner way of thinking and approaching the markets. That way, who you are on the outside world kind of reflects your trading and, more importantly, your habits. Because I feel like trading habits are like the most important thing in the world. If you can't keep your wins, you're really shooting yourself in the foot, kind of. I would always suggest learning how to keep your wins, learning how to reduce losses as best as possible, and focus on risk management. But the only way that I think it's possible, especially without trading with 50, 100 grand, is learning how to spot trades that are really high upside, very minimal downside, and high probability. How we're going to do that is by thinking in asymmetry. So, what I love to preach to all of my own students, all of my own followers, anybody that's willing to listen, is selectivity in trading is always going to beat constant action. If you're constantly looking for something to trade, you have more opportunity to go and lose money. I'm curious, how many of you guys have lost a trade and you're like, fuck, maybe I shouldn't have placed that?
All the time, brother.
All the time. All the time. And trust me, I've been there. I know exactly what it feels like. You kind of place that trade, you kind of look at it, you're like, maybe this will play out. You kind of give yourself that belief that if it does, you'll make money. And if it doesn't, then hey, you'll stomach the loss. I don't believe that's kind of the right way to go about it. I think like each and every single one of you, including myself, we have to follow a trader's standard because I feel like trading is one of the hardest industries in the entire world. Nobody really owes us money. We're here looking for really high probability in our favor within markets that billionaires and institutions trade in. So it's kind of on us to set that standard for ourselves. And how we're going to do that is by thinking in asymmetry. So what I kind of showed you guys today is why do traders struggle to keep what they make, right? We spoke about risk management, or is it the standards in which they choose their trades? I'm sure you guys choose trades that are really good high upside trades. I'm sure you guys already follow asymmetry. But the only thing is, unless you're putting like a definition behind it, it's very hard for you to actually validate what you're doing. It's very, very, very difficult. That's a lesson that I had to learn the hard way. So the quote of the night is actually by Charlie Munger, and it's not whether you're right or wrong, but how much you make when you're right and how much you lose when you're wrong. This quote pretty much sums up what asymmetry is. When you're trading and you're losing, the only way that you're going to win is by making sure that your wins outweigh your losses. If you're consistently using improper risk management, if you're consistently betting on trades that you know are going to lose, or like you're kind of entering without knowing what your defined risk is and actually being comfortable losing that amount, you're always going to be on the losing end of this. And I know it sounds harsh, but at the end of the day, I think it's better for growth to call it for what it is. So being on the right side of this really involves just having standards, and I'm going to show you exactly how we get there. Traders bleed capital doing a couple of things that I think everybody does. They overtrade, they oversize, they risk way too much. This one, I'm pretty sure this kills a lot of you guys more than these. Not securing your wins. Sometimes traders, how many of you guys have placed a trade? You've seen it in the green and you never took a single set of profits.
A lot of us have.
I think in terms of trading, again, it's one of the biggest account killers, not knowing when to go and take your profit. But we're gonna fix all of this in a second. What I want you guys to fix immediately, before you even place like more trades, is number one, tighten your rules and systems. Know exactly when you're taking profit, so you're not turning winners to losers. This really kills accounts more than just simply losing, because your risk is defined during a loss. Like it just goes straight to your stop loss, whatever it is. But when a winner turns into a loser, you start to do the rest of these things, right? You start to overtrade, you oversize because your ego gets hurt. You're like, fuck, I just took a really nasty loss. The biggest way to kind of fix that is, again, tighten your rules and whatever systems you have. Increase your cash flow. I think this is the most important part, because when you're I'll get to your question, Nigel, in a second. But when you're increasing your cash flow, you're kind of more abundant. You're like, I don't really need to take every single trade. And if you're not taking every trade, you have a much, much less probability of even losing in the first place. So once we increase cash flow, we set higher standards. And then obviously the three added together of stricter rules, more abundance, higher standards equals more money. So how I would do this if I was in any one of your situations is every dollar you have should have a purpose before you even trade. Debt repayment for me is number one. Emergency fund and savings, number two. Investments and then trading is honestly last. Learning how to trade before you even trade is so imperative. Risking very small amounts instead of blowing bags is also very important, because that money, remember, if you're just blowing bags on trades, this money could go here. This money could also go here. This money could go here. You could be allocating all of those funds into places that are a lot more safer than kind of your bad habits. So I really want to preach that, because all of us, we want to learn how to win, and winning is not easy. It takes everything within you to learn how to win, and learn how to win kind of like a real trader would. You know what I'm saying? So when I think about winning, I think about it in terms of I'm not fighting for a dollar. I don't need to be kind of, scraping wins together. I want to be prepared when everyone else isn't. How many of you guys have kind of felt FOMO within the markets? You kind of seen Bitcoin, you've seen Ethereum, you've seen Micron, you've seen whatever, move in the markets, and you're like, yeah, I wish I would have gotten in that earlier. How many of you guys kind of have that regret?
I got FOMO with Micron right now.
Yeah, it's a very, very
Hey,
common thing. Very, very common thing. I will tell you this: never ever have FOMO in your life. I think FOMO is a natural feeling. Don't get me wrong, but when you have the standard of a trade will always kind of come back to you, you won't really chase anything else. Like, for lack of, you could cut this out if you want to, but like chasing a trade is like chasing a partner. Why would you chase somebody that doesn't want you? Why would you chase somebody that is like far out of your reach? You kind of want to take what's in front of you and take where your risk is lowest. And without having FOMO, those opportunities will come. They're literally every single day you'll find a brand new one. I promise you that. Money there's so much money to be made, and it doesn't even have to be with just like individual equities. You can do it so many ways, like a SpaceX. The IPO game is one of them. We'll actually get to that in a second. But there's so many ways to place really high upside trades. You guys shouldn't have FOMO at all. But on all of these notes, like in terms of who you are outside of trading, I don't think trading should be your freedom. I think it should amplify who you already are and kind of what you already have. So once all of this is checked off, once you have stable income, high interest that's paid off, savings, investments set, then I like to call this TTM, time to multiply. Before we even like multiply the asymmetry in trading, we'll get to that in a second. You kind of got to protect your empire. How many of you guys don't focus on risk management at all? The reason I keep bringing this up is because unless like you to your core belief of who you are, you're kind of risk management first, trading will always be difficult to you. So how many of you guys really feel like risk management is not on your priority list? Making money is first on your priority list.
Yeah, a lot of us.
The hardest part about trading is kind of shifting out of that mindset of money being first on your priority list. First thing you should focus on is how do I protect my empire? If you guys are working your asses off every single week in your business, work, why don't you want to protect your empire? Why don't you want to protect what you've already worked so hard to build? So how do I do that? Trade higher quality, trade less frequently, and take on less risk with higher upside. We don't have to take on so much risk with so much money. The biggest thing that burns people is taking on too much risk with a lot of money. If you want to take on a lot of risk, use a little bit of money. It's a again, there's a lot of things that I want to break down, but it's very difficult. It's just the psychology of us as people. We're not here to fight who we are as humans. We're kind of here to accept that and look for environments where trades have really high upside for us where we can actually be greedy. Like I can guarantee you, a lot of us, we kind of have that I want it all at once mindset, and that's perfectly normal. But if you want to think that way, you have to find environments in the market that provide opportunities like that for you. And once I realized that about myself, because I'm not perfect, I kind of stopped looking for like the small opportunities and risking way too much and looking for the big opportunities and risking a smaller amount that I know if it pays off, I win big. But if it doesn't, I kind of lose small. So that's what the asymmetric standard is. This is the known concept in trading. It refers to risking a very small amount as your reward is going to significantly outweigh your risk. Me personally, until I had this definition, until I really looked into what this was and did my research, I never really set that standard for myself. So this is something that I want each and every single one of you guys, if I can like leave here with something, um, that kind of resonates with you, it would be live with asymmetry in mind. Very small risk for significant upside, high probability. And where do you find opportunities like that? The IPO market, long-term market compressions is kind of when we spoke about it last time, Nate, where the market is trading sideways. You find it in trend reversals, market imbalances, and then the channels that we drew out last time. The best part about having standards and looking for asymmetry is even if you guys are not operating with a ton of capital, you will require higher level decision making, but you still will make a good amount of money if you follow said standards. So I guess I kind of presented all this to say your risk management comes from kind of who you are outside of trading, and who you are inside of trading just revolves around having the standards to find really high upside trades just by kind of understanding how to reverse engineer them and kind of take them. Yeah, that's pretty much all I had for this part. But there's a couple of stuff that I personally want to look at in terms of stocks. But I want to know if you guys have any like questions. Like, what are your biggest struggles before I kind of look into this?
Joseph, my brother, do you mind going over the parallel channel again for the new people?
You guys really like the
Just
parallel
real
channel,
quick,
eh?
just real quick.
It's so
It's not.
I'm gonna leave it in Nate's hands. I'm gonna leave it in Nate's hands if you want to go through that today.
Hey man, pop it, bro. Pop your
All
shit.
right. So how many of you guys have like a dual screen on your how many of you guys could like open another screen? Like use Zoom and then use another screen?
What do you mean?
Like pop open, because if I'm gonna do this, we might as well do it the right way. We might as well teach them and have them apply it in real
Well,
time.
just show them because it's recorded. So
Okay, I
whenever,
gotcha. I gotcha.
yeah.
So first thing I do is number one, I want to look at an asset where I can actually draw this out. Companies that just IPO'd, for example, like Palantir is very difficult. Robinhood also not easy. Stock like Visa is perfect. Visa IPOs back in, when is this? 2008, global financial crisis.
Ain't that
So,
crazy? I did
pardon
not know that.
about Visa?
Yeah, that they started in 2008, right after the crash. I thought they was like a old school, like maybe
No,
1990s. Who was the
no,
original
2008.
credit? Who was the original credit card?
Brother, I was 9 years old back then. I have no clue.
It sound it sounds
I
nice.
was 9 years old. I have no clue.
All right, go ahead, man.
But yes, logarithmic chart, correct. So how I draw this out, I can go and remove this. Remove. You want to start from the very beginning of whatever it is that you're looking at. Sometimes it won't fit. I'm gonna be honest. Like Apple, if you try to do this with Apple, it's not gonna fit. You got to find where the market starts trending, and then you simply just do that. It's not hard, but like you'll the nuance of it is the difficult part. Like if I go to Apple and I try to do the same thing, uh, let's remove all this stuff. I can't draw this out. Like look, from the IPO, where are we at? Back in the 80s. It's not possible. I can do a pitchfork though from over here, but I'm not doing that now. So yeah, just start where the market starts trending. You go from the very lows, take the channel into wherever current day is. Make sure that you're hitting at least a couple of times off the bottom here. Make sure the median gets respected. This is the most important part, the median. The reason why this is important is because if you're seeing price below this line, a, a buying bias is really the smartest move that you can make. If you see price above this line, your selling bias is obviously going to be more dominant. When we're looking at these channels, they're obviously going to give you the directional bias months down the line. So for traders, you might be looking at this and you're like, okay, well, I see Apple really undervalued. The difference between where we're at right now and where the next, form of resistance might be is about 133% away. So hypothetically speaking, if you guys put $200 in Apple, you bought one share at 316.22 USD, you guys would be making, what is that, 332.44 back. So this is, I guess, the way to find really good opportunities. It's simply just looking at it in the long term and kind of spotting different levels of support and resistance. So that's where you'd find it on Apple. Google kind of do the same thing. I have a pitchfork drawn out here because Google was kind of ugly. I'm not gonna lie to you. Google was really ugly. And let's actually go and delete this. And there's another thing that I want to look at before we end that. So remember how we spoke about it's very, I guess, like nuanced how you do it each time. Yeah, I wouldn't really draw it out like this on Google. You see how it kind of hits off the top already? There's not really much data that we can use anymore. It's kind of like, oh, it's either we see this as overvalued or we think there's more room to grow. And if there is more room to grow, this channel is kind of irrelevant right now. So what I would do is instead learn how to draw out the pitchforks. They pretty much do the exact same thing, but it kind of gives you more data. This, I'm not going to lie to you, we do not have time for me to teach you how to do this. I took a couple years to even understand how any of these pitchforks work. Like there's so many of them. If you guys want to like go on TradingView for like an hour, by all means. But like there's four variations that you guys can play with. Take them, draw them out. Can you, brother? I'm telling you, go on ChatGPT. Easiest way. Pitchforks. It's very difficult for me to like break down. I would just simply prompt this in if one of you guys want to like write it down. How to use pitchforks on TradingView on logarithmic scale, and why are the pitchforks important? I would simply just ask ChatGPT that.
Hold
If you
on,
guys,
say that again. I'm going to chat it right now.
you know what, I have a question instead with Nate's permission. How do you guys feel if we had like a whole maybe separate time where we actually go and break this down, like where we have like a private session, we break this down? Like how many of you guys would be interested in like a full breakdown from step A to step B where you guys do this with me like side by side all together?
think that'll be
No,
great.
that's dope. I'm a fundamental trader, but I just gotta, when KB be sending me this or Mouse or whoever sends me or they drop inside the chat, be like, look at these things. I just like to understand what the hell I'm looking at. I'm gonna be all the way honest with you.
I think the easiest way to do that is again with the charts. You can find so much value, and you can kind of assess all of these lines and these levels as value. You guys have FOMO with what was the one stock? I think you guys said Micron. How many of you guys have FOMO with AMD? My apologies. You're
Uh,
looking at AMD. You're like, I don't know if I should buy this or not.
I
Shit,
don't look at AMD too much.
Yes.
Too
I
many
think we,
voices.
I
Since that
think we all,
motherfucker was at $100.
I think we all got promo on SanDisk.
Yeah,
What is the ticker symbol? SNDK, I think.
I'm glad I still got that, but
Holy, this went up in a straight line. Jesus Christ. Yeah,
yeah,
I would have FOMO on this too, but I don't think the move is done. I
nah, I don't think so neither.
It's
Like,
not
When
giving us
you
any signs the move is
wait.
done.
When you say you don't think the move is done, you think you still got some more upside?
There's
man,
no
what?
my bro, my whole thing is why are we betting against something that's not proving to us as has any sign of slowing down? If I see a speeding car in front of me, I'm not gonna just stand in front of it. I'm gonna get the fuck out the way, or I'm gonna if in terms of stocks, I'm gonna go and buy it. If it's not showing me any sign of slowing down, why am I scared of it? I'm interested in that. Give me opportunity. And at the end of the day, if I'm wrong, then I'm willing to take on that risk. The stock is this is the way I think about things. You guys have to think in terms of asymmetry. The stock is already up that's it. I thought that was a lot more. I'm not gonna lie to you. 8,000%, 6,000% to current price. This is a lot, but it's not a lot in terms of like what other stocks have done. I'm not gonna lie to you. This is not like extreme, extreme, extreme. It's crazy, but it's not like ultimately like extreme pump and dump. I think this could still have more room to grow. Like Nate was saying, all of these sectors are kind of all finding other little companies that are growing alongside it. So even if you're not taking on the risk on SNDK, another company will kind of give you not similar returns, but you'll still get that high upside with maybe less risk. But I'm not, I don't know, man. I don't know. I would bet on this just for the sheer fact that everybody else is scared. When everybody's scared, the winners win. When everybody's kind of fearful of like buying into something because they're like, oh my God, it's going to crash. This is now a really established company. Like they have leverage in the field that they're in the industry. I would never bet against any company that has leverage against their entire sector.
Just think
Never.
about it, bro. The other day it was at 1,500. The 15 high 1,500s. Come
Well,
on, out
let's
here, y'all.
you know what we should do? Let's do some practical stuff then. Let's see if we're actually overvalued then. When you draw out the pitchfork, we're still nowhere close to being overvalued. Or when we draw out
Bro,
the channel,
what?
we're nowhere close to being overvalued.
Yeah,
You
bro.
hit off of
What?
these because remember what we learned the last time,
I'm
guys. We learned
buying
about
that.
time. We learned about time in the market. The price doesn't mean anything. When we look at the price, it's just a way for us to value it by dollar. Obviously there should be other mathematical reasons why. But price is not really the biggest factor for me. I'm looking at time. How has time reacted? And because this is a very clean channel, traders are probably thinking the same thing. Oh my God, it's overvalued. And then we go and pop off an extra 3x, and they're like, "Fuck, now I should get in."
So
That's
you think it's has a little bit more run time or whatever before it splits?
maybe a hot take, but yes, I think it does. I think it just based on what I'm looking at, because normally when you're looking at assets that kind of want to top and then blow up, attract the exit liquidity, it's normally like very, very, very fast. Like this type of price action is it's fast, but it's not like as fast as you want it. How do I even explain this in plain English? Um, how long have you guys been trading for? A couple months, years?
yeah, we all around. Couple months, years, couple days, couple weeks.
You'll notice very niche, very niche. You'll notice when something is ready to kind of go downwards, the market has moved so fast in the upwards direction, and it kind of feels euphoric. It feels like, damn, I can't fucking lose. So that's kind of what you have to expect out of these assets. It's not when everybody's scared to buy because they think, oh my God, it's going to crash. It's when those people have converted to now I want in. That's kind of when you're like, oh, okay, well, Now you know, I think this is overvalued. But in this case, the channel supports the theory that we're still undervalued. AMD is pretty much the same thing. What other stocks have you guys been looking at? Like,
We've
I
been
would
look-
I would spend hours just drawing out these channels, but continue.
Hey, go look at Meta. I was looking at Meta.
Meta's going up. Meta's going up. There's no doubt in my mind. I would bet my house on Meta going up over the long term. I would bet my car. I would bet my firstborn child. We broke this down last time. Here's the big channel. Meta has so much upside. If any person on this earth, any investor, any individual that has a TradingView account thinks Meta is just going to be capped up here, like this is Meta's true ceiling and resistance, I think they really underestimate how much potential the market has for stocks that kind of very, very niche, very niche. But again, we broke down the timing thing in the last session that I had with you guys. But all of this, Nate, is kind of one big pattern. All of it is one big pattern. Apple, same thing. I'll break it down in a second. But like, here's your kind of head and shoulders on the long term, whether that's your left shoulder here, here. Here's your head. And then there's your right shoulder. So if this wants to go up, I'm not really looking at this and thinking this is my resistance. I'm using that same channel and I'm like, okay, cool. Maybe that's my median. And if that is the case, then all of that is your upside. So like I'm telling you, if you guys play with these tools, trading becomes so easy. Like you guys could be sharing your own trade ideas inside the chat, analyzing whatever assets that you guys want to look at. And you guys kind of won't have that FOMO because you're not really trading the price or the momentum or the headlines, and you're kind of trading what you guys deem as value and probabilities. So if I could provide anything, it would be that. But in terms of Meta, to kind of answer what you were looking for, I think Meta goes up. Even if it goes down in the short term, I think you get a recovery, and I think Meta's upside is still awaiting. I don't think Meta has really done anything of major significance yet. I'll look at Nvidia in a second. But from Meta's IPO back in 2013, it's only seen 3.5x growth the current, or not 3.5x, 35x growth the current day, and then 4.4x to whatever that peak was. That's not a lot. Like it's not high at all. You've seen SNDK do that in what, a couple of weeks. So obviously Meta's not SNDK, but I do think Meta's growth could be the next 10 years very, very, very high, just due to what we're doing right now in short. Nvidia. Uh, what are you doing, Nvidia? Oh, I'm like, what the hell am I have this extended? This right here is the pitchfork that I was talking about. What form of pitchfork is this? I could literally spend 2 hours teaching you guys how to do this. Oh, this is the original one because it's so complicated. But Nvidia, you might still have really good asymmetric upside here. Just based on what I'm seeing by eye, my downside is very capped. Give me a second, I'll zoom in. But like my downside is capped. If you guys are actively tracking this, you know that the key levels to look out for on Nvidia is the high sitting at 235. You want price to trade above that. And if you guys are looking at price trading lower, you're obviously targeting the previous lows, which are sitting at 163. So if you guys are trading this, you're probably like, I don't want it to go 19% lower. For options, this is very, very big. Like I wouldn't even recommend trading this on options right now unless like you have a really tight stop um below here. Like if you're trading this on options, you're assuming this is already done. Like the move has already been priced in, or the lows have already been priced in and the market is ready to move. But I don't suggest that unless you're willing to take on that risk. I think it does play out, but if you're not willing to take on that risk, I wouldn't suggest it. The for like an investment opportunity, it looks like it's there. Your downside risk is 20% if you're willing to wait it out. Hypothetically speaking, if you're bearish on Nvidia, let's look at the upside and the downside. Where's my tool? We broke this down last time. You're pre-anticipating the head and shoulders pattern here, right? Whatever that is, and then there's your head and shoulders. That's if you're bearish. If you don't see like Nvidia going up for whatever reason, you could have a bias like that. Price could obviously stop here. We could go higher from there. So many options, so many options. But in terms of just strictly trading wise, not something that I would take on unless like I was really prepared for the lows to be priced in. But how are you guys thinking about looking at like some of these assets? Like, are you guys trading them? Are you guys investing in them? Are you guys what's the
So I'll say, especially when it comes to large companies like Nvidia itself, right, being 4 trillion. And I want you to make sure you talk about SpaceX and what you talked to me about as well.
we'll get in there
Uh,
in a second, yeah.
Joseph. But when it comes to those larger assets with those heavy market caps, we've been owning them, right? We haven't been trading them too much, but we've just been buying and holding, right? We've been thinking about more 10 years out, 20 years out, obviously, because if they're in a bottleneck industry or they're probably the power player in their sector or for the world, right? We just been owning them. And I think we learned our mistake with just trying to trade these valuable companies. I know I did, trying to just trade Nvidia. I'm up 200%. Ha ha ha. I take my profit. I'm good at $114 now. It's over 200 something dollars, right? And I just missed out on all those gains because I was just trying to specifically trade them. So I think we're doing both, right? We're buying and owning, but we're also kind of getting in where we fit in when it comes to the trades as well, taking advantage of the time and just the volatility that we've been seeing.
I think that's the best approach in all honesty. Like I think it's the healthiest approach to capital preservation, number one. And actually growing your capital. And number two, taking advantage of the trading opportunity is always good because you get to, catch those moves in between. In terms of what you were talking about, kind of buying the company and like just owning it for the next 10 years, I think SpaceX could be one of those great opportunities. I want to spend, again, if it's okay with you, a session where we actually break down what happens during IPOs. Like, there's a lot of stuff that we broke down earlier in terms of not losing money. When you guys watch this back, it'll all kind of click. But when we're looking at SpaceX, how many of you guys actually follow like the IPO cycles? Like, have you guys ever back tested what happens during these IPOs?
No, talk to us.
Um, let's actually reverse engineer some of them. Trading is really all about back testing. How much do you think Palantir is up since IPO?
What they IPO at, like a couple dollars, right? Let me see.
$9.
Yeah.
$9 and 6. That's crazy. So from $9.06 to 129 in current day. So from the lows, it's up over 34x. I caught like a crazy trade like this. I'll show you guys. But catching like trades like these is really not hard. The IPO game is very predictable. Catching the right ones though is a difficult part, but I'm willing to take on a couple of bets that don't go my way to take on the one bet that does. That's what asymmetry is. In terms of SpaceX, we're kind of doing something that I oh, SP. I don't know why I don't whatever.
CX.
There you go. Okay. When we look at SpaceX, there's not really much info that we could use. There's a couple of things that could happen. Palantir upon IPO, we had that huge run up, and then what happened? We can actually put this side by side. But Palantir, we had this huge run up, and then the market kind of sold off. When the market does this, it's not at random, right? Institutions, hedge funds, smart money, they all want to own these companies for cheap. Why do you think they're selling them off to literal dollars, right? Now it's worth 129, but back then it was worth 5. So this was a penny stock at some point. And then hedge funds, these big institutions, they took advantage of it. So normally what happens is you get your fun time where you IPO, everybody's all happy with the returns. This company will never crash. It's going to be the next whatever, right? And then the market sells off and sells off and sells off significantly. At some point, you look at this and you're like, well, F this. It's just boring. Like, there's nothing really happening. And then that's when the real move happens. When I look at SpaceX, this that very well could be the possibility. Very well could be where you get that little run up and then the market, sells off and then you get your compression, your expansion. But Elon Musk is a different animal. I have no clue what's going on like behind the scenes with this company. If I'm not mistaken, what is their competition? Is it just Rocket Lab? Is that their only comp?
Um, at scale, they really don't have any competition. But I mean, I guess you can throw Rocket Lab in there.
Well,
But got it together. He keep blowing up shit. But Blue Order
well, Rocket Lab. What is the?
Arcade.
RKLB.
Yeah, no, I feel like a noob RKLB. I don't really look at these because a lot of them have already broken out, and sometimes I just leave it on the watch list. Yeah, this blew up 4,000%.
Bro, I was so mad. I seen it at when it was at like I think $15 or something like that, maybe a year and a half ago. I didn't really understand or like see the importance of it, but now you can see how they're so important to the space because you gotta think they're going to be responsible regardless of, dealing with the launching of it. And then also another one is RDW, which actually deals with the launching and the satellites. So without the satellites, you don't have any of the infrastructure that you need. So they're very essential too.
Something like RDW, this looks like a 5 year, 10 year play. Like I think it's like setting up for something larger. Like this is not something that I would like trade. If you want to own this, by all means, if you've done your research. But I kind of want to go back to what we were talking about in terms of like the Palantir and the SpaceX comparison. Obviously two completely different companies. But the reason why we're looking at it is because we want to analyze IPO behavior. I kind of want to look at what other IPOs have done. The upside for IPOs, we broke down in the presentation that we did. This is where you make a fucking bag. For lack of better words, this is where you make a fucking bag. If any of you guys want to put your money into anything, make sure that money is going to eventually pay off big. That's the way that I look at it. Where is my lowest risk? How can this pay off as big as it could potentially be? This is owning a company well before that company becomes a household name, right? It's during that IPO period where you get to own a piece of something potentially very, very, very large if you catch it early. And I think this is where a lot of your interest should be. Like the ETF, the long-term investments is cool. That's what's gonna, build your wealth. But trading, if you want to multiply whatever capital that you guys have, this would also be a way to own a really big company early, but treating it from a trading lens and kind of managing it through an investing lens, if that makes sense. We want to find a very specific entry point with different criteria, and we want that criteria to meet very high upside. We have the patience and we kind of have that fundamental aspect to us where we're holding really good companies, but we're getting in and scaling in from a trader's mindset of how can I make as much money as possible, but how can I hold this for the long term and protect my bag and scale out when it's actually time to do so. So my mindset when I was like working a regular 9 to 5 job is how can I make money from, stuff like this. The IPO game is one. We're not going to break down everything in today's session. But like SpaceX is either going to crash and you're going to get a really high upside after some really boring periods, or it's just going to continue sideways. Either way, I'd recommend scaling in. Do not miss a great opportunity because you wanted to time it. Biggest mistake you could ever make. Do not try to time a single thing. I personally, I'm not testing my luck. Um,
Question for you.
Ask
How,
away.
how so when it comes to this IPO SpaceX, how low do you think it goes?
It depends. If we go higher and then go lower, it's very hard because it's been like what, a couple weeks?
Um,
It's been
what
like what, 4 weeks public? Whatever it's been. My thing is like, this is kind of like different than what like we're normally used to seeing. Like, let's take a look at what happened on Palantir. Couple of weeks here. Does this actually follow through with what we are looking at? 30%. Who knows? You could see a run up. Like me, like I'm not my thought process goes like this. If this is a company in the next 30 years, 20 years, whatever the case is, that's going to, 10x, 20, 30, 50x, I want as much in it as possible. Like you kind of want to, for me at least, we're still young, right? These companies, if we really believe that Elon Musk, the richest man in the world, is going to create this company and it's going to thrive. I'm focusing on the really long term and buying as much as possible. But who knows really where it goes? Could be $20, could be 30, could be 19. You really don't know. What stocks are you guys looking at? What other stocks are you guys looking at?
Look at Netflix.
You got time? I'm looking at BE, RCX, Sienna.
CRM too. We get
You guys have so much on your watch list. Netflix, I think this is a really good long-term opportunity, to be honest. I'm not really uh the way that I'm looking at this is if you're gonna like okay, I'm assuming whoever asked for Netflix, you're looking at this and you're like, okay, it's already like really low. Um, it's 44% lower than all-time highs. And you're like, okay, I kind of want to catch the reversal. I'm assuming that's what your mindset is, right?
yeah.
Um, what would the upside be? Like 80%, that's not bad. I guess when you look at like opportunities like this, you kind of have to factor in it might not happen on your timeline. Like it might be a really slow process until those highs come in. So long as you factor that in, I think this is a really good buy. Maybe it goes lower, who really knows? But at the end of the day, these channels that we use, it's showing me my probability is really high to buy right now. And then if it breaks, obviously that was out of my control so long as I'm managing my risk. Who knows? If Netflix incorporates AI, if we see we kind of follow that trend, you might be a really, really, really big company beyond what it is now. So we'll kind of see what happens. But
I just want to add to that. Um, you literally seen exactly what I seen, right? And it's because I told the guys a long time ago when Netflix announced their stock split that we gotta wait for this thing to fall, right? Because it's that asymmetric risk. Like I would rather it comes all the way down or come into a good buying area for us to take it long term. So we actually put a leap in to 2028. So you're actually on point with what we're talking about. Like when it comes to this might be a slow grind back to the top. But if you understand that and if you're cool with the leap or shares at this point for a 10-year hold or for a 3-year hold, I think we'll be fine, especially when it comes to being the largest in the streaming space. They got the Netflix houses now down in Dallas, and now they're trying to open up all around the world. They're actually stepping into the space where Disney is actually struggling when it comes to their park space, when it comes to their infrastructure space. So I'm eager to see how they build that out. They had plans that when there's new shows that they build, they're going to try to make them as interactive as possible so they can be stationed at these Netflix houses. So I went to the Netflix house about a month or two ago, and they have all the Stranger Thing characters. They got Stranger Thing games. They got all of that interactive, and that's one show. What happens when they have 20, 30, 40 shows where you can do that? Now you have so many more people putting money into this company from a whole different stream of income. So from a 3-year hold, 10-year hold, around $75, even if it goes lower, I like Netflix long term.
honestly, me too. In terms of even if it goes lower, I have a very specific trading model that I use, and it kind of tracks different trends within the markets. Right now, we're kind of in that slow, choppy phase. If I can provide any form of insight into where Netflix might go, because fuck it, let's just predict. I think we're in that phase where the market is kind of kicking people's ass. Like this is a very slow grind to the downside. And normally what follows after that is one big swoosh. So don't be surprised if you get like a little dump on Netflix. And it's so funny, earnings is coming up. When is this?
Thursday, next Thursday. Yep.
You know what? I might be placing puts on Netflix. I'm not gonna lie to you. I might be looking to place puts on this because based on my trading model, this really is an asymmetric bet to the downside. In my humble opinion, if this does not play out, please don't sue me. But I do think there is downside just based on what I personally look at. Who really
Gotcha.
knows? Who really
Yeah.
knows?
Gotcha. And see, that's one of the reasons why we trade and we own and then we kind of redefined our strategy, right? And it's because when it's a valuable company like Netflix is, even if it does fall, right? If you do have a leap, something on it for a year, 2 years, 3 years, it gives you that protection for it if it were to dump. and you still believe in the company, I mean, why not hold it? If it does dump further down, like you just said, why not buy more? Right. And so
That
that's kind of the perspective that we've kind of been moving with, right?
I think that's I think what you're teaching them that the people who are early in their trading journey might not really understand. You're not just teaching them how to spot opportunities, but you're doing something that is, I think it's more valuable than the majority of people might think, and it's managing trades.
Mm.
Because when you're teaching them about averaging down in trades and you're teaching them like, hey, this is like a long-term outlook, not only are you solving like the conviction problem of you have your analysis set, you kind of know why you're getting into this asset, but you're also solving the problem of, hey, you guys struggle with risk management. Let me step in and explain to you why we're entering this trade, but more importantly, what could potentially happen and kind of where we foresee this asset going. So I think that's like a really dope thing that you guys got going on here, to be honest.
Thank you, brother. I be trying to tell these niggas, man, but these niggas don't be listening to me, man.
It's very hard
I'm
because
just
you,
playing.
bro, I'm telling you, I think when they start seeing the massive wins that you see and you kind of compare them to where you once were,
Yeah,
I think it creates like a deeper appreciation for the whole process of it all.
absolutely.
I think the process kind of just takes time. But then when you look back in hindsight, you're not really now 10x richer, 50x richer. You're kind of a smarter man. You're a better man. You're a better woman. And I think that's the part about trading that everybody will eventually learn to like go and appreciate, you know?
Absolutely. Absolutely, brother. And I just want to talk to that point one more time. It's like because when you're in the beginning, and Joseph, I want to ask you a couple questions about the beginning of your journey too. Um, when you're in the beginning and you don't know something, you don't know what you don't know, right? You don't know what you don't know. And that's why I feel like it's very important to kind of create a strategy that's kind of recessional proof, right? Because we've been there, right, Joseph, where we start in the beginning, we're just blowing money and we can't figure it out. Now, as you get older and older in the game, and that's why it's important to be what's the wording? Time in the market is better than time in the market. It's very important because the better you get, the longer you do it, you stop making silly mistakes that you kept making in the beginning. And one of the best ways, or one of the big, I'm gonna tell you this, one of the biggest problems that traders have is controlling their emotions. That's literally probably the emotions and risk management are probably hand in hand, but it's probably the biggest thing that traders struggle with, right? And I feel like, how can I help beginners deviate away from all the pit stops and all the stuff that I had to go through? Let's focus on buying time on our companies, right? Let's buy quality companies. Well, what about BBAI or what about AT&T? I think AT&T is going to blow up in the next 30. Dude, if it's not moving, I think Ian says this on Market Mondays. If it's not moving the GDP or if it's not like in super important piece to what we're building out over the next 10, 15 years, why are we playing with things that cost point 50 cents? Why are we playing with things cost point? And I'm not saying don't do that. I'm just saying as a beginner to get away from all the shit that I had to go through, what Joseph had to go through, buy quality shit, buy them on a super deep discount, and think long term when you look at these companies. 80% of the time the market is rigged to do what? Go up.
Fuck you, bro. Listen, okay. What you just said, honestly, it hits so many points that like I had to really go through because when you're first starting trading, it's kind of like you don't know what you don't know, like you said, right? The experience of going through the motions, I'm telling you guys, standards, most important word. If you leave this with anything, standards. I'll say it a million times. You want to have standards in the market. To your point of like finding like the cheapest thing and like thinking it's just gonna explode. Like I used to do that same thing too. um, Now I even tell people that I know, like, listen, buy quality. Simply buy quality. Quality is going to preserve your money. You're not going to be trading with your last dollar, and if you are, you probably shouldn't be. So you want to be using all of the money that you can't afford to lose to put it in quality. Why would you, if you had $300 and you needed to have like a really good jacket for winter, you're not going to buy 15 bad ones. You're going to buy one really good one. I want to be prepared for winners, right? And at the end of the day, there's always going to be winners within the markets, and you always want to be prepared for that. If you think all day is or every day is summer, either move to Miami and be prepared for Miami, weathered, but like the markets are not like that. So always be prepared for some form of winter. And the way that you do that is through having stability. Stability comes from buying quality assets. Stability comes from doing the boring shit that you probably will look like it's above you. But
Right.
you got to do the shit that many people think are above them because they're not rich, right? They don't make money. Why are we copying the people that don't make money? We want to be doing the things that other people do that make money. And it's hard and not popular and sexy as it is, it's what eventually when you're 30, 40, 50 will pay off. So that's just the way that I look at it. It's just like I'm not above doing the boring stuff.
Yeah, man. And to your point too, before I get to this next segment, before we get off here, it's like obviously like knowing yourself, and you brought something up very important. You said what you do outside of trading really defines who you are inside of your trading. And it's such a huge point because a lot of people don't understand your habits of what you do outside of you making money really bleeds into when it's time to make money. And that is why it's important. And I wanna wake it up here, Joseph. I seen a quote the other day that said day trading is dead. And I said, and then I'm thinking about it. I'm like, they must have lost their mind. Then I got to thinking, I'm seeing people talk about there's so many quants, there's so many there's so many algorithm traders. When you really think about it, the people that are literally sitting behind their desk every day that is just trading from morning to night, they're not doing anything else with their life.
Can I add to that? Do you still have more? If you have more, I'll happily let you finish. But there's so much I want to say about
No, no,
this, and
no.
it's
We
not.
can we can open it up. We can all talk. Everybody can talk about this. I just wanted to bring up the topic.
Day trading is glorified gambling. Fuck day trading. Day trading is literally glorified gambling. I do not know a single person in my own network. If you guys do, fuck, send them my way. I'll give them 100 grand, let them trade with my money. But like, I don't know any person that can sit in front of a goddamn screen all day and print money every single day. It's just not possible. Like those people who like day trade, you got to understand they are the people who are engineering the moves for like guys like us, guys who are willing to wait the move out. They're engineering it all of those fucking losses that they take. Oh my goodness, all of those losses they add to the fuel of like bigger trades. I want each and every single one of you to understand that every fucking losing trader they fuel all of these massive trades, the ones that people are kind of above taking because they're longer, they're boring, you got to wait them out. All of that is fueled by day traders.
Mm,
And a lot of people don't understand this because the markets are zero sum. Somebody's winning and somebody's losing. And the
facts.
people who are losing are fueling the moves. And when you try to day trade, you're putting yourself in position to kind of feed the bigger fish and feed the bigger winner. And I'm just not interested in that. I'm
Yeah.
not interested in being another statistic in the market. I want to make money. And the way that I make money is by understanding where the majority of people lose money. And day trading is just a trap. I would never suggest
Yeah.
any of you guys day trade.
Yeah. And to your point as well, I've blown an account countless of times. So for me to blow my account, the good thing about hurdles and losing is that when you bump your head, if you're smart, you got to come up with a new way to win. And that's just life. And that's why I love the market so much, is because if you put the market side by side with life, it's really identical, bro. In
I
life,
agree.
if it's really identical. If you take the long route in life, if you take the long route in trading, over time you'll probably be pretty successful. But if you want to take the quick route, you want to scam, you want to rob people, you want to steal in life, if you want to day trade, you want to buy a put, you want to buy a call, you want to do this every single minute of the day, these little pit stops are going to keep wiping you out every single time. In life, you're going to keep going to jail, you're going to keep messing up. And that's why I say everything I see in life now, bro, I see a chart now. It's crazy I
Me
say
too.
that,
Me too. Me
but
too. Me
but
too.
I'm always looking at appreciation or depreciation when it comes to people, when it comes to the food that I put in my body, when it comes to going to the gym. Like Is that an asset or is that a liability? I've programmed my life to look
Hey,
at
I
crypto.
swear, bro, literally.
Am I lying, Keys?
Hey, no, a
You're
hundred
not lying,
percent.
brother.
I'd be like, do I buy this? Nah, that ain't gonna do nothing for me. It ain't gonna make me no money. I
Especially when it
swear,
come
bro.
down to calories.
But well, listen,
Oh,
hold, wait. So let
This
me let me
nigga,
stop you
Mike.
guys for a second. What? Listen, guys,
man,
guys,
this
guys,
nigga
guys, guys.
here. I'm going to lemon drops and lamb chops, man. Come on, but go ahead.
All right. So the word that we learned today is asymmetry. All of you guys are pretty much describing the same shit. Focus on where that high reward is, and if the risk is low, let's take it, right? It's all about growth at the end of the day. If you're not growing, you're kind of stagnant. If you're stagnant, you're falling behind. And why do we want to fall behind? So all of that is asymmetry. Just picking the best investment you can make. I,
Yeah,
I appreciate you bringing that up, bro, because I feel like a lot of traders don't open up about like blown accounts. They don't open up about like the process. And like again, not everything is like sunshine and rainbows, brother. I think you know that I know that. There's a time where I tried to play like a fucking earnings put on Tesla, lost 8 bands in a sitting. I was sick to my stomach. Went back to work the next day, like fuck, I could have fuck, I was pissed. So
yeah,
yeah,
man.
I learned a
Yeah.
lot of lessons.
I was gonna add to that, and like I said, we're gonna finish it up here in a second. Um, just
Hey,
adding to
let me
that
speak
point,
to
man.
that real quick, cause
Yeah, talk to me real quick.
man, so y'all before the Liberation Day, the famous Liberation Day, I was up big on my account. That was like when I was first investing up big on my account. Liberation Day happened, struggling for a minute, building my account back up, and then I blew my account doing zero DTEs and day trading, like we said, like weeklies and whatnot. Finally learned my lesson. Finally learned my
He said,
lesson as
finally
y'all and
learned my lesson. And
and
bro
as
was
y'all
waxing
see,
that ass. Okay.
whoa, man, count getting blown. But anyways, but finally learned my lesson. Now I put time on my contracts and we back over from where we was at on Liberation Day.
Yes,
So
sir.
just buying time and like we said, that day trading shit is dead.
And I'm gonna just add to that last real quick, bro. You gonna get to a point where you tired of losing fucking money in this shit, man.
That
You
was
are,
me.
And
That was me.
you're
Don't tell
and
me,
it's
bitch. I just lost 20.
it,
Don't even talk about
and
it.
I can say that, but listen to
Don't
this. I can
even talk about it.
listen to this. Listen to this. I can say that, but until you go through blowing your account multiple times, you're not really gonna feel it. It's like being with a shorty, or for the females on her, being with a guy that and somebody tell you like, hey, don't get with that person, they gonna break your heart. You like, man, they broke your heart. They ain't gonna break my
Ah!
heart. And then you get with that person and they do you worse than the person that they did. And then you really feel it like, oh, that's what they was talking about. So once you really feel blowing your account, right? Once you really feel making those mistakes, that's when you really get to see, okay, I need to change some stuff up. But I want to add to that as well. You know, there's a famous quote that says, smart people learn from their mistakes, and wise people learn from
Mm,
other people's mistakes. So
Whoa.
if you're new
mm,
on here, if you're new to trading, if you're new to investing, if you want to bump your head, go ahead and do your thing. If you want to go play with Dogecoin and Trump coin and the Donald stock that ain't moved, if you want to go do that and bump your head after people have told you don't do that, bro, go do your thing. But if you really want to start growing, not just in your investment account, but in life in general, you gotta turn into a wise person. You gotta seek counsel. You gotta ask questions. Hey, what you do wrong here so I don't do that? What you do right here so I can do that? Once you start asking questions, once you start surrounding yourself with people that are doing really good things, you don't deviate away from the plan. You actually lean into the plan a little bit more. And I feel like a lot of traders get into this game thinking once they hit on a trade, once they hit on two trades, oh, I'm inevitable, bro. I'm cooking. And then it takes that one trade to wipe you out, bro. I think they said you take the stairs up and then you take the elevator down, bro, in this game. You work your ass off. You grind all the way up them stairs. For the people that work out, you know how that stairmaster feel. Imagine all those gains up for the elevator to take you right down in a matter of seconds, bro. All your gains wiped away. And a lot of us, I want us to realize day trading, and I'm saying this, day trading is not the end goal. It took me probably a couple weeks to finally say this and say this out loud. I've kind of mentioned this to a couple people, but when you really think about it, bro, and how I've shaped and changed my life now, day trading is not the end goal, bro. Day trading is a vehicle to get us to the end goal, but it's not the all like the makeup of what our life needs to consist of. No, we need to be having multiple streams of income. Like I'm telling you, if you're day trading from 8 a.m. to 8 p.m. and you're doing futures every single day, there's no way in hell that you've built other businesses and built other streams of income to keep you recession proof from going broke. Because we all know you one trade away from wiping your account out. But if you got multiple streams of income, this is what Joseph was testing to. If you got multiple streams of income, you got multiple ways of money coming in. You're not that stressed and pressed for this trade to bring you in $1 million. If you're getting my reference, we all want this one trade. I want this one trade. This one trade gonna do it all for me. It's gonna change my life. But when you got multiple streams coming in, you change your perspective on how you even enter the market.
Can I
You're not
be?
you're not looking at this trade as this is gonna get me rich. You're looking at this trade as in these are gonna be these small steps as I build my account to where I want to be in the future. That's a whole different mindset. I'm able to pay my bills, I'm able to pay the debt off, and I'm able to learn this great skill set at the same time, and I'm building my account. That's different when you do day trading full time as your job. Listen, I've done it. I was doing it 9 months ago. All I was doing was day trading. And then I started realizing, damn, I'm losing more than I'm winning. Why am I losing more than I'm winning? It's because the more opportunities you give the market, the more opportunities you give the market to lose as well. It didn't click. Yo, the more money I keep is how I'm going to continue to keep growing my account. I know it sounds cliche, but when you get in the thick of things, when you're learning the RSI, when you're learning the logarithmic scale, when you're learning the parallel channels, when you're learning the all the indicators that you can think of, the oscillators, when you get in the rabbit hole of it, you stop thinking with common sense and you start thinking like this technician and how you need a oh I see the it's gonna fall here and then I gotta get in on the hammer curl and then it's gonna bro when you slow the game down
And to
it's like
speak to that, Nate, let me speak to that real quick. I'm gonna let you go. Don't get caught up in these day traders on social media because they can own nightclubs and they can just throw money at that mug. Like there's a few guys that we know on social media that be just buying cars every day, trading every day, but they can do that because they got a business on the side and they bringing in 100K a night. They bringing in 10K a day on the other side, but they're not showing you that. So just be careful on the day trading side.
I think. Can I? Um, I'll
yeah
leave you guys just for myself with something just to speak on what you were saying, Nate. Um, Day trading, guys. I would want to play my probabilities if I were you. Like, why would you guys want to be in the market every day? Like, it sounds cool. Like, I'm trading in the financial markets. Like, I'm placing trades daily. I'm increasing my potential of winning. But like at the end of the day, in its like truest form, day trading is not going to get you out of your current situation. I don't
mm,
think day trading has got anybody out of their current situation. If it's not worked out for you, why are you assuming that it's going to work out next week? There's no one winner, at least in day trading, that's gonna like pay out big. If you're trading options, like you could get really lucky, catch like 1,000x move, but that's after losing a million times and then you're breaking even. Why do you want to take down that route? Place a couple of trades, I don't know, a month, two, three trades a month, two, three trades every 3 months. If the market's giving you really good windows to day trade in specific windows. That's when I made the most money. I flipped 35 bucks into fucking 20K in 3 days by day trading in windows. If you guys want to gamble, label it gambling, but at least do it intelligently. Like there's ways for you to risk your money and there's ways for you to lose it. I would focus on where the high upside positions live, but not trying it every single day. Like you want to protect as much money as possible, but if you really want to like test your skills as like a trader, do it in windows. Understand those windows, know how to spot them, and then leverage that. Because I'm telling you, there are ways for you to make a shit ton of money. I'm not going to deny that. I've done it multiple times. Know where those windows live and stop trying to trade them every single day. That's why I mentioned standards, asymmetry. Well, I'll get back on here with Nate's, okay, but I'm telling you, standards, best thing that you will learn. There are windows to make a ton of money. Why don't you do your research on how to understand where those windows live? Nothing stops any of you guys from, learning that, but
Yeah, man. Yeah, man. Hey,
that's
man.
just my whole point.
Hey, Joseph, man. We really appreciate you, bro, coming on. Always a pleasure. Um, we're cooking up something, Joseph. We're not gonna tell them yet, man, but we cooking up something, brother, for the future, for the ecosystem, for everything that Joseph's building. We're cooking up something powerful that we should be announcing. Probably over the next couple weeks, couple months, as we get everything together. But I always want to say appreciate you coming on, just sharing your wisdom, right? Because you're from Canada, bro.
Hmm.
You're from Canada. Like we're all spread out. We got people on the East Coast. We got people down south, right? I'm in
Canada.
Vegas, right? I'm in Vegas right now. You got people in Indiana. You got people coming back from Belgium, like Mason. You got people all over, bro. California, everything with different demographics of what they do. Some people play ball. Some people are workers. Some people are entrepreneurs. Some people are strictly investors. And for you to come on and continue to keep dropping the wisdom for us, we really appreciate you, brother. We really, really appreciate you, man.
Bro, I think building community is a great thing. And I think when somebody's building something that's inevitable, bro, something that people deserve to learn, I don't think you should hold back. Right? Like I think when something has a meaning, I think you contribute to that in every aspect. So you say thank you to me, and I say thank you for giving me the opportunity to go and share whatever I've learned to somebody else. Bro, if they can pick up 1% of the stupidity that I had when I was trading, I think I could sleep very well at night, knowing that like I've passed along mistakes so they can learn from me. Like, why would you guys should not be learning from your own mistakes ever. So I think like between you and I, we have a lot of experience. I'm always, always humbled to share that experience because I feel like trading is just that one space where we all can recognize the high side and obviously the downside. You
Yeah.
guys are never alone. You guys are part of a really good ecosystem here. I can tell you guys have a really, really good person guiding you guys, giving you guys great advice. Please listen to the advice you guys are given, or else you guys are going to be the ones giving advice. You ever notice how the guy in the street corner always gives the greatest advice? He might look crazy, but he gives you the greatest advice in the world. There's a reason. He's lived all the mistakes that you guys shouldn't be living. So again, I'm just happy to be able to share that to a bunch of people that are actually working towards something meaningful. And yeah, I appreciate that.
Yes, sir, brother. Yes, sir, brother. And so just to finish it up, y'all, like I said, I'm out here in Vegas. I'm out here for a wedding. We got a lot of big events going on this weekend. So much stuff going on. NBA, NBA summer camp is going on right now, so I'm about to try to get to see all the young guys that just got drafted. About to see what they're about to do this year. I'm about to get a first dibs to see them. There's a lot of AAU basketball games going on. I'm gonna check them out. Concerts, comedy shows. It's just so much, right? And I feel like that is the power of just always putting yourself in a room. You always got to keep putting yourself in the room. Wherever you go, whatever you do, whatever field you're in, whatever industry you're in, always pay to be in the room because there's people in the room that you need to know. There's information in that room that you need to know, and you're not gonna get it sitting at the crib, right? You're not gonna get it sitting at the crib. So, hey man, another great call, number 34 in the books. Joseph Jenkins back on. Um, did we miss anything? Atlanta, month away. Tickets bought. Airbnb, I'm still looking. I'm still seeing if we gonna have if we want to do the Airbnb. I think the last time we seen it was around 3 grand for 3 days. And that what's that? We had 12 to 15 people, 10 to 15 bedroom. It's about like 250, $260 a person for a mansion. And I was thinking about if we do that, getting food catered at the house. It's only 10 minutes away from the Mercedes-Benz Stadium. I'm definitely looking at doing that. I'll know, like I said, I'm just been kind of putting stuff together, trying to game plan it all the way out because we're also doing a nightlife, right? We're not just doing going during the day to learn. We're gonna be doing nightlife too. And guys, I'm gonna just give you a tip about networking. The real relationships don't happen during the day. I'm gonna give you a tip about networking. The introduction happens during the day. The real relationships happen later in the evening when you get to kind of unbuckle your button up shirt a little bit. When you kind of get a little bourbon, get some tequila, you really kind of get to lay your hair down. That's when you really get to know somebody. And bro, y'all can listen to me and hear from me firsthand. All the networking events I've been to, all the relationships that I have to this day that are very powerful relationships, they didn't start at 12 p.m. or 1 p.m. in the afternoon. They happened when I introduced myself, and then later on in the evening when the sun went down a little bit, you really kind of get to know a person. You really kind of get to connect on a deeper level. Like, yo, what you been through, man? Right? What you been through? Right? Now you kind of get to talk about that later because earlier in the day, you kind of got to be super professional, super business. It's the first time I meet somebody. Now, when they see you cool, those are when the real relationships are met. So we got a whole nightlife in Atlanta, Thursday night, Friday night, Saturday night, and we finish it off Sunday night before we head back Monday. Tev, I'm gonna get the information when I'm coming out to New York. Um, get that out to you soon because I definitely want to see if we can meet out there. And like I said, November, end of November, like not Thanksgiving, but like middle of November, it's hot in Dallas, right? It's hot in Dallas. It's hot in Dallas in the end of November. I'm looking for us to all try to make our way down to Dallas, right? I'm gonna reserve an Airbnb, big ass crib. Already talked to them about the venue. They already given me the venue. We're gonna get a whole bunch of food. We're gonna link up. We're gonna connect as an ecosystem. Everyone flying in. I think that'll be really great for us in November. I think that'll be really great. So, man, like always, bro, tomorrow's Friday. Let's finish the week. Let's keep building this shit out, man. Let's keep doing our thing. Let's stay connected and let's stay together. All right, y'all. Talk soon, man.
Love, family.
Love, 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 love. Peace, family. Love, love. See y'all.
Love, family, love. Y'all be safe, bro. See y'all niggas in the market tomorrow.